Guys, we have stolen nearly $400 million from Target this year. I'm not joking. In the quarterly earnings call yesterday, the CFO explained that inventory shrinkage has cost Target nearly $400 million year to date. Now, technically, there are a handful of things that contribute to inventory shrinkage, but the primary reason is something they refer to as organized retail crime, which is a big fancy way of saying consumer theft. Retailers are reporting that organized retail crime is up more than 25% this year. This could be because stores are increasingly relying on self-checkout lines as opposed to associates. A study completed in the UK found that 1 out of every 5 people admitted to stealing in the self-checkout line. Maybe our social contract is busted and we're just a whole generation of degenerates. Or maybe there's another reason why more people are stealing. Hands down, across the board, we are worse off financially than we were just a few years ago. And hungry people make for sticky fingers. With inflation, the average worker's real earnings have decreased. Basically, on average, we've all taken about a 3% pay cut, which means that savings is down and credit card spending and balances are way up. The monthly payment for the median price of a new home has jumped $800 a month. That's an 80% increase in the new monthly mortgage payment. Nearly 1 out of every 3 workers, including those who earn more than 6 figures, are running out of money before payday. We can actually learn quite a bit about our employees by listening to reports from our major retailers. In particular, what sort of trends they see from shoppers. Walmart shared in their latest quarterly earnings report 3 interesting findings. Number 1, they are continuing to gain market share in higher income households, people who previously did not shop at Walmart. 2, the general merchandise sales have declined, but they've had significant growth in groceries and essentials. And finally, consumers shifted strongly from using cash and debit cards to credit cards. So we have higher income households spending more money on groceries than anything else and using a credit card to pay for it at Walmart. The average American worker is feeling financially insecure, and employers need to recognize that. Even though their jobs haven't changed and they probably got a cost of living adjustment, their wages still aren't enough, which leads to financial stress and general dissatisfaction with their job. Home prices and rising interest rates make it much harder to relocate for a new position. Savings into benefits like the 401k are less of a priority now, and employees are gravitating towards more immediate financial benefits like higher pay, emergency savings accounts, and student loan repayment programs. The current economic environment, inflation, and the state of the American worker will speed up the evolution of financial benefits to a broader and, yes, more immediate package. Are you ready? That's it for this week. This is Jeannie, the 401k lady.